One big beautiful bill has just been passed into law, and this is what the big guy has to say about it.
A few moments, we're going to make official the greatest victory yet when I sign the one big, beautiful bill.
A lot of people have their comments about the big beautiful bill, but it's over 1,000 pages and there's a lot of information within the script. I would want to see how this affects prices moving forward. Looking at the economic calendar, we did have NFP last week, whereby it was one of the rarest NFPs we have ever experienced, happening on a Thursday because on Friday was Independence Day for the American people. The non-farm employment change numbers actually came out better than anticipated, which beat forecast by quite significant, over 36,000 people. 147,000 jobs were added to the American economy over the past month. Unemployment rate actually came down from 4.2% to 4.1%, and unemployment claims continued to steady out. Looking at the graphical historical data of the non-farm employment change, ever since mid-2022, we have been seeing the job market in the United States of America hold at a relatively good level. Switching gears to this week, we are going to start off the week very slow and calm, whereby on Monday we don't have any major news releases. Early morning Tuesday, we do anticipate the Reserve Bank of Australia to lower the interest rates from 3.85% to 3.6%. An hour later, they are going to have their press conference, and I would want to read into the document what they have to say about the future economic projections. Moving over to Wednesday, starting off with the Chinese yuan releasing their CPI year-on-year numbers and their PPI year-on-year numbers. During the same Asian session, we are going to see the Reserve Bank of New Zealand is going to release their interest rates, whereby we do anticipate these people to hold the interest rate at 3.25%, where it is currently at the moment. Later on in that day, we are going to have the minutes of the FOMC meeting that previously had occurred. On Thursday, as usual, during New York session, unemployment claims, closing off with Friday during London session, the Great British Pound is going to release their GDP month-on-month numbers, and then during New York Open, Canadian dollar are going to release their unemployment rate and their employment change, similar to what the United States calls the NFP numbers. The week is going to conclude with the federal budget balance of the United States, which will be quite interesting to look at. Jumping over to the charts, the markets are open currently at the moment, starting off with gold. Price action has been very interesting of late. If I can start on the daily time frame. On the daily time frame, prices has been consolidating ever since mid-April of this year. We are currently in a very interesting zone, whereby if I can go down to the H4 time frame, looking at price action, prices came back down to retest a very important region last week, 32.45 region. We did see bulls coming into the markets, and then prices did fade out as we anticipated for the NFP numbers. This sharp candlestick to the downside was the NFP numbers, this specific candlestick here, whereby the markets did retrace into the golden ratio. I would want to mark this zone of interest currently at the moment. This will be my region of interest. Moving on to next week, whereby if we do have a clearer break to the upper side and a closure coming back to retest the most recent resistance, I would want to look for further buying opportunities to the upper side. But at the same time, if I do see prices coming back down, I would also want to look for further buying opportunities to the upper side. Now, why am I going with a bullish bias on gold? Now, this is just for educational purposes, but I do believe gold in the long term, it's very bullish to the upper side. And looking at this price action, could this be just a retest? If you look at it on a larger perspective, this is the ABCD pattern. Very simple, whereby the market rallies, base, rally. A very simple concept to execute in the financial marketplace. Moving over to silver, whereby silver has been very bullish. We did create all-time highs just recently, and looking at the market open currently at the moment, so the market has actually gapped up. Prices of silver is up 0.64% on the day. Quite interesting to look at this information as early as now, whereby we are nearly 220 pips from last week's closing prices. Now this is very also correlated. Silver is correlated to gold. Looking at where the market has gapped to currently at the moment, this could mean that we might see further buying opportunities on silver. A very interesting gap that we are seeing form at the moment. I'll want to take my Fibonacci retracement from this low to this high, and then I'll want to get into a buy limit order just around that region, targeting these most recent highs and a stop loss just below the opening price for a risk to reward ratio of 1:5. Very interesting to see how this is going to play. Now moving over to the dollar index has been trending to the downside currently at the moment. Of late we have been seeing the dollar index make new lower lows, lower lows, lower lows. We did have this most recent structure here, and could this be the same thing we are seeing on gold but inverted, whereby prices did come to fill in these inefficiencies, and the longer direction of this market is to the downside, whereby if we do break these lows, we might see new lower lows forming in the next few trading sessions. After the Israel-Iran war did cool down, we did see the volatility index break the most recent support, and prices actually closed around the most recent support that was formed back in mid-June. The S&P 500 has made all-time highs. The S&P 500 did make all-time highs last week, and looking at price action at the moment, I wouldn't want to catch tops and bottoms. Same could be said with the Nasdaq, same could be said with the US 30, the same could be said with the Russell. I'm in a position of the Russell currently at the moment, but if you do get an entry opportunity on the S&P 500 this week, I would be more than happy to take buying opportunities, and this is what I would want to be very careful, because prices has quite a significant void whereby there's a lot of inefficiencies in the financial marketplace. Now, prices never shoots like arrows. The inefficiencies that we do have ever since prices has been making, and this is something historically whereby if the market makes all-time highs, there has to be a short-term retracement, and this is what I want to be very careful with the S&P 500 moving over to this week. I would want to look at opportunities if prices do come back into the 6,100 region, but I would be very careful with the S&P 500. Who knows, possibly the market, the way it has gapped during this open, could shoot further aggressively to the upper side without even going to grab liquidity. Whenever the market is making all-time highs, please be very careful with the execution. I want to move over to Brent. Brent, it has been a very interesting commodity to be looking at in the financial marketplace of late, specifically looking at what the Middle East is going to have its say on, or its share on. Whenever you're looking at oil, oil is very sensitive, much similar to gold, in the sense that if there's any geopolitical tensions in the financial marketplace, we usually see oil rising to the upper side. Could this be an opportunity for oil to start moving to the upper side to fill in these massive voids that we have left in the financial marketplace. WTI, same thing could be said. Looking at Bitcoin, last week did end around above the 109,000 region, and I would want to see more longs on Bitcoin, possibly targeting 111. That sounds like a good number. That sounds like a really good number. I would want to wait for New York to find an opportunity on Bitcoin, but if prices do come back down to this low, to $111,000 a Bitcoin, this could be a very good execution for me this upcoming week. I would want to look at long opportunities on British pound against the United States dollar, but this is going to be a dollar cost average whereby I'll be looking at opportunities the more prices go against me. I would want to have another position just below those lows, anticipating that the British pound is also going to be stronger compared to the United States dollar in the upcoming few weeks. Looking at price action, we did have a rate of liquidity around 1.34161. The market pushed to the upper side. Now we are currently retracing. I do believe this is around the Fibonacci region. Perfect, whereby we are respecting the golden retracement region of the Fibonacci, and this could be an important price point for prices to continue moving to the upper side. British pound against Japanese yen, I'm going to let that slide. I would want to focus on USD CHF. Looking at price action last week, we did break this most recent lower low. Prices formed a new lower low, and this was on the verge of everything happening. Looking at the Swiss franc, they have a very interesting financial system that tends to work whenever there is uncertainty in the financial marketplace. I would want to see more short positions on USD CHF. Last week I did have this position, and it was very interesting because prices did tag me out on the spreads and then went in my direction. Now I would want to have my stop loss just above this most recent high, give my stop loss some breathing room, and I would want to look at data to the left hand side to see where could be our next potential targets. Interesting, going to the monthly time frame. The last time prices was headed in this direction was back on September 2011. I would want to see how price action is going to behave towards that particular region. It's a region that we have not tested for quite some time right now, and we are headed towards the downside. I would want to see prices tapping into that region on USD CHF. New Zealand dollar has been choppy of late, whereby price action has not had a clear sense of direction, and I would want to wait it out on New Zealand dollar. But looking at Australian dollar against the United States dollar, we do anticipate the Reserve Bank of Australia to lower their interest rates this week. Could institutions start selling as early as now, and we target these lows by the end of the week? Once again, this is only for educational purposes. Final thing we are going to go through is the commitment of traders. Looking at the short format on gold and silver, we can see that on managed money, we did have quite a significant amount of long positions being offloaded, while at the same time a bit of short positions being offloaded. Gold, 3,817 short positions being offloaded, while 1,500 positions being added.